When we IPO'd in 2018, we bought uranium at $21. The uranium price on Friday was $77.
In September, the World Nuclear Association predicted that uranium demand could double by 2040 to more than 150,000 metric tons a year.
In the next 3 years, the energy needs of AI will equate to the total energy consumption or electricity consumption of Japan as a country. Back in 2011, China had 17, 18 reactors. Today they've got 56 and they're busy building, as we speak, 26 reactors. So we've had this steadily increasing demand side, but very little investment on the supply side.
Uranium price over, say, the next 12 months and beyond, are we talking $100 a pound at some point?
It takes the average uranium mine to go from discovery to production is about 16 years.
Hello, with me today I have Andre Liebenberg, Chief Executive at Yellowcake. Hi Andre, thanks for joining us today. Look, for those who don't know, what does Yellowcake do and how does it make money?
Lee, firstly, thank you for the opportunity of doing this again. Yellowcake it's a very simple story. We've created an entity that holds the physical commodity and allows investors to take a view on the commodity price. Uranium is one of the commodities that you can't own at home. So, we've created this structure, and in a sense, in terms of making money, we don't make money in the traditional income sense, but our entity really is a capital appreciation vehicle. So, if you just look at our history, when we IPO'd in 2018, we bought uranium at $21. The uranium price on Friday was $77. So that's the capital appreciation that we allow investors to take a view on.
There are very serious questions being asked about the world climate and growing demand for energy, and it's suggested by some that nuclear is the new green source of energy to power economies and technologies over the coming decades. How do you see the future of energy supply and the benefits for Yellowcake?
Yeah. It's a very good question because we traditionally think about nuclear as a very low carbon 24/7 power source, but I think that discussion has now moved on. Instead of being an asset that's supportive of climate change, it's now being viewed as a critical asset that not only supports climate change, industrial growth, but also energy security. Post the Russian invasion of Ukraine, many countries re-looked at nuclear as a source of critical infrastructure to support their energy needs. So I think that has moved on. And what's become interesting now is we've started to see policy, regulation, and capital align and in pushing nuclear forward. There was the announcement a week ago by Cameco, Brookfield, and the US government to invest $80 billion in nuclear. And that's a perfect example of the alignment of private capital, public capital, regulation, policy to push nuclear forward as a critical infrastructure asset.
And clearly the benefit there is Yellowcake owns the asset price goes up, shareholders benefit.
Yeah, so when we set Yellowcake up, we took a view on the commodity. Commodities are cyclical, and we convinced ourselves that uranium was at the bottom of the cycle, or close to the bottom of the cycle. We looked at supply-demand analysis. Post-Fukushima, virtually no investment went into new uranium discoveries and mines, and the demand was increasing. And then, really from about 2019, 2020, 21, we saw the US government put a lot of money into keeping nuclear, extending the lives of the nuclear fleet. And in the background, or alongside that, we saw China invest heavily in nuclear. In China, back in 2011, China had 17, 18 reactors. Today they've got 56 and they're busy building, as we speak, 26 reactors. The build program there is enormous. So we've had this steadily increasing demand side, but very little investment on the supply side. And that really is our thesis. We think that in the short to medium term, this industry is going to be supply challenged, and therefore the uranium price has to go up.
Yeah, I want to talk a bit more about demand and supply. In September, the World Nuclear Association predicted that uranium demand could double by 2040 to more than 150,000 metric tons a year. Last year, it was 67,000 metric tons. So I'd like to know whether these figures match your own forecast and what might the implications be for your company.
Yeah, I prefer to talk in pounds, or at least have that mindset. It's 2.6 times, your tons to get to pounds. But that is exactly the point. The industry this year will produce primary production of about 160 million pounds of uranium. Consumption, reactor burn, is about 180 million pounds. So we're running a primary deficit today, and that in the past has been filled by inventories and secondary supplies. Now both inventories are being drawn down and secondary supplies are shrinking. So that that primary shortage is starting to be felt. And then if you think about doubling that, doubling 180 million pounds, how is the supply side going to match? And you think about 2040, it's what, 16 years away, 14 years away. It's not that far. It takes the average uranium mine to go from discovery to production is about 16 years. So if you think that you need to double current production in 16 years' time, someone needs to be looking for, finding, and starting to, develop, permit these new mines. So those figures, I think, are generally well accepted. The IAEA has its own figures, WNA has its own figures. Various research houses put out their figures, but I think they're all of that order of magnitude. Now, whether we triple nuclear by 2050 or we double nuclear by 2050, that supply gap is so significant. And that really goes back to our investment thesis.
Okay, well, talking about the demand boom, the US government, as you mentioned earlier, had signed an $80 billion deal with Westinghouse to build these large-scale nuclear reactors, support what they say is the growing electricity demand from AI. So clearly that's big news. But what about the other drivers? You mentioned some, but previously, but what else is driving this boom?
It's industrial growth in the developing economies. If you look at China's build program, which I just mentioned, India's got a big build program. The UAE have just completed a 4-reactor program. We're seeing reactors built in Egypt, Turkey, and a whole host of Asian countries are now looking at nuclear as just to meet their growing energy needs. So you've got that growth in the emerging markets driven by industrialization, and in the developed markets where traditionally the view was that nuclear would sort of decline, we are now seeing this viewed as an important backbone and also in support of the AI. So in the US, where they've got 92 odd reactors, and the view was that would over time decline. We're now seeing the life extensions, and we're now for the first time ever looking at the restarts of reactors that have already shut. So 3 Mile Island 1, Palisades, Duane Arnold, people are actively working to restart those reactors. So a big demand base that was seen to be declining is now steady and increasing. And again, just to put it in perspective, the US is the biggest consumer of uranium and nuclear fuels. And if you then aggregate Europe, which is the Eastern Europe countries around France, it equates to about the same amount. And then China is playing catch up. In uranium terms, the US consumes 40 to 45 million pounds of uranium. China's consuming 20, but it's doubling. So I think that, and then you touched on AI. There is no better power source for these very, very sensitive high-tech chips. You can't run a data center off wind and solar, and even coal. The variability of the fuel inputs can cause these GPUs to kind of trip. And the AI data center growth, I think the figures I saw was in the next 3 years, the energy needs of AI will equate to the total energy consumption or electricity consumption of Japan as a country. So, the numbers are staggering. Now, will it all come to fruition? I don't know, but it all points to the fact that we need a lot more uranium and probably at a higher price.
Okay, so looking at the supply side now, as demand grows and prices rise, one would imagine there'll be a rush to bring on extra supply. In recent years, China has been busy looking for new supply. So how easy is it to ramp that up, to turn on the taps? I mean, you've alluded to it already, but what happens to this supply-demand imbalance?
Yeah, I think it's going to remain challenged for a while. I mean, if you just look at where uranium comes from, so Kazakhstan produces just over 40% of the world's uranium. Canada is about 26%, then Namibia is just below 20%, and Australia. If you add those four countries, that's over 75% of global uranium production. So four countries produce, the bulk of the world's uranium. Kazakhstan has grown its production base significantly. Back in the early part of this decade, it was around 6 million pounds. They currently produce 65 million pounds. But their resource base is also, it's starting to roll over. A lot of those projects were discovered and developed in the Russian era. So not a lot of investment has gone into finding the next generation of projects. Canada has got a few companies that have got very interesting, exciting projects. But permitting takes a long time. It can take 5+ years to permit a uranium mine. So it's the resource is there. It's just it takes time, and I think the price is not yet at a level that incentivizes new production. If you go back to when we IPO'd in 2018, there were a whole lot of greenfield projects on the drawing board then. Not one of those projects has started construction. So 7 years on, and we've seen an increasing price. We haven't yet seen any of those projects start construction. We've seen some shuttered projects, brownfield projects, come back into operation, but no new greenfield projects have been developed against a backdrop of a rising uranium price.
Well, I want to talk to you about that price. I mean, it's risen over the past few months, been quite volatile. So we're near both a 1-year high and the long-term uranium price. What does everything that we've talked about do to the uranium price over, say, the next 12 months and beyond? Are we talking $100 a pound at some point?
I think $100 a pound is very achievable. I mean, if you sort of separate out the spot price and the term price, utilities that consume the uranium, they make 85% of their purchases in the term market. So that's kind of the real price. The spot price is the one that's most visible, and people focus on that. Utilities only buy about 15% of their needs in the spot market. Most of the people who participate in that spot market are traders, the odd utility, financial players. Like Sprott, we've also bought in the spot market. But the uranium price, February last year, got to 107, the spot price, then went all the way back to 63. So that 100, we've seen that in the spot market. But I think we can see that in the term market in the near term. Over the last 18 months, the term price has held at around $82 a pound, despite the spot price going to 107 and back to 63. We've now seen the term price up at Trade Tech calling it $86 a pound. I just don't think there's not a lot of supply available at those price levels. If you look at the two biggest producers, Kazatomprom, they are sold out basically till 2030. Cameco, the world's second largest producer, sold out till 2030. So it's an extremely tight market, which suggests that as utilities come back and start contracting, I think they're going to see prices in the 90s very quickly and probably into the hundreds.
Okay, look, at 1.3 billion sterling, you're the sixth largest company on AIM. Mm-hmm. Any plans to switch to a main listing, or are you happy to remain on AIM?
Yeah, so the history of being on AIM is really twofold. Firstly, as an AIM company, we have this contract with Kazatomprom where we can buy up to $100 million of uranium per annum at our option. We can do all of it, none of it, multiple tranches, and it's essentially at the spot price. So when we IPO'd, we were a $200 million company. To raise $100 million, the AIM rules allowed you to do that much more easily than the main market. The second point was that under our structure with Kazatomprom and a single commodity, the rules didn't allow us to go to the main market and get indexation. So with the recent rule changes by the FCA, which I think come into force in January next year, that, this sort of collapsing it into a commercial sector, we think we will qualify. And now, with a 1.3 billion pound market cap, that $100 million is no longer the constraint. And the new rules have also, will allow companies to issue a lot more equity. So it's something that our board are thinking about, are considering. I think if we went into the FTSE 250, we'd probably be in the top 100, we would. Getting indexation is an important component of that. So you get the passive, the tracker funds. But our structure is sort of main market compliant. But we would have to obviously add on the governance side and change a few things. But it's something that the board are looking at and have looked at in the past.
Okay, Andre Liebenberg, Chief Executive at Yellowcake. Thanks very much for joining me today.
Thank you very much, Lee.